Good evening, councillors, ladies and gentlemen, and welcome to this meeting of the Audit and Governance Committee. Am I echoing? That's unusual for me, isn't it? I am Councillor Barry Pierpoint. I'm the chairman of the committee, and my vice chairman, Councillor Anton Danny, is to my right. Before we start, may I remind you in attendance, everyone, this evening that the meeting is being streamed live on YouTube. We've got any members of the public here tonight? We haven't, have we? Before we move to the preliminary items of this evening's agenda, I'll need to run through a few housekeeping details. Restroom facilities are available for ladies on this floor and halfway down the stairwell for gentlemen. In the event of a fire alarm sounding, officers will escort everyone out of the building to the nearest fire safety point in the car park. Would all persons addressing this meeting please do so through the microphone system at all times, as this meeting is being recorded. Considering we've got a lot of people here tonight, that can half a mile down the room, just please make sure you speak quite loudly so we can hear you. Please be advised that abuse or intimidation of any kind will not be tolerated. Anyone who is deemed to breach this requirement will be warned and asked to refrain. If the behaviour persists, they will be asked to leave the meeting. Now we'll move to part one of the agenda, the preliminaries. Any apologies for absence?
No apologies have been received, Chairman.
Thank you. Does any member wish to declare any interest in respect of any items on the agenda? Councillor Gleeson.
Thank you. Yeah, until the end of the month, I'm a board member of PSPS.
It's kind of you. Anybody else like to declare any other interests at all? Declaration of interest? No? Great, thank you very much. Do I have permission to sign the minutes of the meeting held on the 18th of November 2024, which you've all had copies and read? Lovely. Now I'm going to find them now. I think they're here, aren't they? That's the ones. You might not make it red, do you? Do you want to date it as well? Okay, there you are. Thank you. Cheers. Right. We've got no public questions, have we at all? I presume, because there's nobody in there.
No actions.
Oh, sorry. Are there any outstanding actions from the last meeting? Jumping the gun here.
Okay, actions from the last meeting have been tabled, so everybody should have a copy, but if you want me to go through any, please let me know.
Could we just have an agreement as to when the ongoing items will be available to the committee? I mean, if we could agree the next meeting, that would be great. If that's not possible, that would be helpful to you.
Do you mean you want an update at each?
When it's going to be completed. I'm talking to myself again, aren't I? I can ask if the officers, please, if they don't mind giving us some indication of a completion date, it would assist us when we're looking at this as an ongoing thing. Otherwise, ongoing will be forever and we'll never see the end of it. And I'm keen that we know when these things are going to be finalised by, so we can see the result being finished. Is that okay? Are you happy with that?
Yes, Chairman, I'll take that forward.
Thank you. But I do thank Amanda for the work she's done here in giving us the information, and it's nice to see that the outstanding items are listed and who's doing them and where we're at that point in time. I think we just need that date now of where we're going to be completed. So thank you very much for that. That's very kind of you. Right. Let's go on to, is there any public questions at all?
There are none, Chairman.
No. That concludes the preliminaries then. We now move to part two of the agenda and the agenda items. Part two is the final external audit completion report, and that's on pages 9 to 52. On this agenda this evening is the final external audit
report, which starts on page 9. I'm going to ask James to present that for us. Thank you, James, from KPMG.
Thanks, Chair. So we presented the draft version of this report to the committee on the 14th of October last year, and this represents the final version. For committee members to differentiate between old and new information has been included in green throughout the report itself. In terms of key updates from the previous version, we have been able to finalise our work associated with the valuation of land and buildings, which has led to the identification of 2 additional corrected audit misstatements associated with the accuracy of the data used in relevant valuations. And you can see that on pages 34 and 35 of our report. We've also been able to finalise our work associated with the valuation of the local government pension scheme liability, and this has resulted in the identification of an additional corrected audit misstatement due to the technical accounting requirement associated with the recognition of an unfunded liability with regards to secondary rate contributions. Our report has also been updated to highlight additional corrected audit disclosure misstatements and to provide detail of 2 additional control deficiencies associated with our work on the financial statements audit and 1 associated with the work over our value for money conclusion. It's important to note that none of these represent significant control deficiencies. An agreed action plan is in place with management, and we're happy that the action suggested, if implemented, will remove these recommendations going forward and further assist in the delivery of an efficient and effective audit process. Overall, the conclusion of our work remains the same from that in October, and that is to say that we are now in a position to issue an unmodified, unqualified audit opinion on both the Council's financial statements and value for money arrangements ahead of the statutory deadline, which is at the end of February. It is worth pointing out that given the context in which the local government audit market finds itself, not a lot of organisations are in a position where they have full assurance both on the prior year balances and the current year balances, and are in a position to sign off a set of accounts ahead of the statutory deadline. Therefore, a lot of positive assurance can be taken by committee members on the status of the organisation now and going forward into the future. Happy to stop there and to take any questions on that report, Chair.
Okay, I'd like to ask a question on page 30 of the report and on page 20 of yours. It's page 30 of the main bulk report and 20 of the KPMG report. It talks about billing arrangements. It says part of the other variations, we've charged 9.6k fees for additional one-off non-recurring fee evaluation associated with the 23-24 audit process. Is that just to do with that, or is there anything else involved in there?
No, the one-off elements are with respect of inefficiencies, timeline changes, and also additional audit effort that's been required to obtain sufficient and appropriate audit evidence over those areas, such as the valuation of land and buildings and the pensions arrangements. We believe where we've got to now with management in terms of the recommendations raised, the misstatements raised, that we have a good plan going forward to help prevent these from reoccurring in the future years.
Would you give us a quote first before we did the work? I mean, does somebody say, right, now we've got the quote, we're happy with that figure, off we go? Is that how it works?
Where possible for certain areas where we know there's a change in scope in terms of audit and standards or something specific where management have asked us to have an additional look, we would provide a fee range. Some of these aspects have come as a result of information not being at the standard that we would expect in terms of or available. So if we take the availability of floor plans to support the valuation of land and buildings, we weren't able to understand how long that would take us to resolve, and therefore what we do is keep in contact with management throughout in terms of the additional time that's being incurred, and at the end of that have a growing up and sensible discussion about what that time's look like and what the value of that time is with regards to the audit process.
Okay, I'm always interested to know when we're being charged a bit more, what was it for and why,
Well, what we can do is we have agreed this separately with management, that we do have a detailed email that lays out exactly what it relates to. So I'm more than happy to share that with committee members outside of the meeting if that would be helpful.
Yeah, that's fine. We're here to ask the right questions and just get the answers that we need to satisfy and clarify things so that we're happy that we are getting value for money, as you keep telling us that. Anybody else want to raise any questions? Sorry, I forgot your name again. Gideon, over to you.
Yes. Sorry, we weren't at the October meeting, so we're only co-opted at that meeting to come in from November. So this might already have been covered, but again on the fees, the 2022-2023 fees were 42,000, and this year they're 131,000. Is a rationale behind that? Is it going to level out at that amount now, or?
Can you get the microphone a bit more close?
Sorry, I'm referring to the audit fees shown on page 30. That in 22-23 they're showing at 42,000, and 23-24 they're showing at 131,000. So I'm querying what that variation is.
So yeah, so 22-23 represent. Yeah. All right, can speak up. So the 22-23 fee represented the last year of the pre-existing public sector auditor's appointment contract. The contract was then re-tendered to take account of the issues within the market and the fact that that last contract had lapsed, and as a result, these fees have been agreed sort of centrally and nationally as part of that re-tendered contract. Therefore, going forward, that fee outside of inflation will bottom out at the current level for 23-24.
Any further questions? Sorry, just give me a name again. I'm terrible for name. Adam, sorry, Adam. Please carry on.
Yes, it's on now. Thank you. Yeah, thank you. Just a few quite minor points. So on page 35 of our pack, so I think it's page 25 of yours, audit misstatements arising from property valuations. Are those all in year, or are there any prior year adjustments in there?
So these represent all in year issues that have been identified. We have reviewed the file of the predecessor auditor and who issued a clean, unqualified opinion. We took comfort in terms of the work that they'd done, but we don't go back and re-audit their conclusions from that perspective. So we have considered the potential of that misstatement. However, we're happy that the ones that we've identified this year represent an issue just for this year.
Okay, nice. That's really helpful. Just a couple more. On page 42, and this may be more a wider question for the council, the threshold of materiality. Now, I understand that's being confirmed as £10,000, and I think it is stated as that on page 37. But there's a note on page 42 which suggests an approach is still to be agreed with the section 151 officer. So I just wanted some clarity about that, if I could, please.
Yeah, so I suppose it might be one for management in terms of their response to that. I suppose what we've identified through the process was the fact that the disclosure needed to be further enhanced if a materiality threshold would be applied with the identification and the formalization of that policy. Now, that policy may change from year to year and needs to be considered by management each year for us to consider. But happy to hand over to Ellie or Nicole.
Yes, please, thank you. So as James said, the disclosure for related parties was consistent with prior year. However, KPMG suggested that further detail needed to be added into that disclosure note. So we came to an agreement that we would add some further narrative around that, but we would put a threshold in going forward that was agreed with the section 151 so that further disclosures, we would be clear on what we were including and what we were not including. So that work is to be done ready for 24-25.
Okay, everybody happy with that?
Thank you. I'm sorry, I do have a couple more questions.
You carry on.
Again, I think these are internal and not for KPMG, but page 49 and actually page 72 as well. I just wanted to pick up.
If they're for internal, can we come back to that
Yeah,
point when we get to that section? Because we're talking about the KPMG report at the moment. So I
mean, they are mentioned in the KPMG report, but they are internal matters.
Okay, well, I'll let you fire away then. Go on, if they're on the KPMG report, go on, fire away.
So page 49 mentions the council's whistleblowing policy, which is dated 2015. There is a further version of that on the internet for 2017. Which of those is available to staff at the moment? It isn't really very clear. And I think much the same thing applies to the anti-fraud and corruption policy. obviously we need to be clear on what council staff can actually see. And I suppose there is also an issue as to whether potentially orphan documents like that ought to be available on the internet. I mean, if they're not linked to an original source document, that is potentially problematic.
Well, I tend to agree with you because I've also marked up about the whistleblowing policy, and I was absolutely aghast to see it like 9 years out of date. And clearly legislation has moved on since then in 2015. So really that's very poor, I think. I'm not quite sure which policy it comes under, who's responsible for that.
Can I ask Ellie to update on where those policies are at from her recollection?
So the response that we received from the monitoring officer regarding this one was that the review had commenced. Can we provide a further update following the meeting, if that's okay?
Yes, okay, that's fine. As long as it's on its way, that's the main thing. It'd be nice to know when it's going to be completed, not 2025 or 2026 or something or whatever. You know, it's going to take a bit of time, obviously. Okay, thank you. Are there any more?
That's fine, thank you.
Can you put your microphone off then for me? Thank you. Thank you, Christine. Right, we'll go on to the next questions from Councillor Cantwell.
Thank you, Chair. I just wanted to ask on page 34 of the agenda pack, which is page 24 of the report. I just kind of wanted to get clarity on the number 1 section of the table. And then on the comment section, it says, through inquiry, management confirmed this was not occurred because the department responsible for the expenditure failed to inform the capital team. And I just kind of wanted to ask, was this an isolated issue? Or was there any evidence of wider communication issues as well?
James?
Yeah, from our point of view, we carried extensive cut-off procedures and search for unrecorded liability procedures, and this was the only one of this nature that we found and reported on. Therefore, we're happy from the procedures completed that was the case. But however, going forward, I suppose what we would have done, we would have extended our testing as a result of that item to try to identify any more circumstances of that nature and did not identify any others.
Happy with that? Yeah, thank you very much, James, for that one. Can I go on to Councillor Gilbert?
Thank you, Mr. Chairman. My question relates to page 21 of the KPMG report, and in particular the reference to, I don't really understand what's being said in the paragraph highlighted in green, actually, about whether or not there's a minimum funding commitment and the council may have an additional liability arising there too. I wonder whether someone could explain exactly what that means, please.
Yes, so essentially it's a very technical accounting requirement associated with the implementation of IFRIC 14. So essentially you would have your primary contribution rates that would form part of a normal pension scheme. Because the scheme is in deficit, there's a need for the council to cover its part of the deficit and therefore need to apply secondary contributions to match the difference between the deficit and what they're currently paying. What we've identified through the use of our actors and our pensions audit specialists is that currently, based on the valuation, there is an additional liability that needs to be recognised within the financial statement to recognise for that value of secondary contributions that needs to be made. So essentially, it is just that, but it is also based on assumptions, data, methodology that's put in, so that value could change year on year, and it isn't necessarily static from that point of view. So it is something that is it's very specific and something that's only actually come to light in the past sort of 12 to 18 months within the sort of pensions audit sphere in terms of the interpretation of that guidance.
I'm presuming from that there are no immediate financial implications, but it's just something to be aware of going forward.
Yeah.
Okay.
Okay, happy with that too? Yeah. Councillor Gleeson.
Thank you, Chair. Not so much a question, it's just, would it be possible to have these printed with both pages the same layout? They're hard enough to understand, and and I'm too old to stand on my head.
I'm aware with the standards officer to make sure we can get the standards right, to make sure they're printed the right way around for you. But I hear what you're saying. I take your point. It is a bit complicated. It's also complicated. We've got different numbers on the things as well, but never mind. Right. Any more questions for James on that point of his report? Are you going to carry on?
Yeah, more than happy to.
Continue, sir.
So the next report is our auditor's annual report, and this report is required to be published on the council's website alongside the signed financial accounts. The idea of this is it's supposed to be a bit more decipherable than the accounting jargon that might be included within the previous document. So it's supposed to cut through the complexity, especially with regards to the financial statements conclusions. So therefore, it does provide a more succinct summary of the conclusions reached and already discussed in the previous report, but it also provides the detailed commentary to demonstrate how we've arrived at our value for money conclusion, which I've already stated is a clean conclusion based on the organisation's arrangements. It is worth noting, therefore, that there is no new information contained within this report, as it directly correlates either to the previous report that we've just discussed or the value for money risk assessment which we presented as part of our indicative and final audit plan as well. So there's no new information within there, but again, a positive outcome for the council across both those areas of our opinion.
Okay, I mean, I must say your executive summary was very interesting. It was quite straight to the point, easy to follow, and I found your reports quite easy to follow as well. Have we covered value for money now? Are we done with that one, or are you going to do the value for money next?
No, I'm happy to leave it there.
Any questions on anything that James has just raised then, on any other report of his reports? Because now's the time to ask the questions. Adam, over to you.
Yeah, just a couple of points again, and I think actually they're more internal things again, I'm afraid.
Cool.
They are, yes. So page 75 refers to feedback to the council's website. I think it might be useful for committee to understand the level of traffic this generates and how we respond to any feedback that comes in via that route. And if there's more we could do to publicise that service.
Yep, nothing we've noted on that one. Anybody want to respond from the other side? No? Okay, any other questions for James?
Just a final one.
Okay, very much.
So page 77 refers to monthly reports that are provided from Lex Leisure, the operators of the leisure centre, to the council. I'd just be keen to understand how the council monitors performance by Lex Leisure.
Christine, off you go.
So on Lex Leisure, they're no longer our contractor. Our contractor is Parkwood. So that was undertaken a while ago. So that any information would be via the service manager. So the service manager will review the contract. They'll have regular contract management reviews. That's probably more a question for scrutiny, unless there is a process and procedure question in terms of what are our mechanisms in place, unless there's any particular issues that are pulled up by the auditors.
That's fine. We'll leave that. Thank you.
Thank you, Adam. Gideon.
Thank you. Yes, on page 68 and 69, refers to a list of efficiencies made. Is it possible to have an indication of how these efficiencies will affect the running of the council in future? Because obviously, if you make an efficiency, and it's going to have an effect somewhere along the way.
You want to answer, Christine?
So the efficiency schedule is in the quarterly cabinet reports. Okay. So if you refer to cabinet, you'll see them materialising in terms of savings and efficiencies. And members were very keen to ensure there was no service impacts as a result of those opportunities.
Thank you.
Any more questions for James? Councillor Gilbert.
Thank you, Mr. Chairman. Just one question relating to page 62. There's a reference to 2 assets were purchased in the year totaling 2.5 million that were not subject to valuation. I just wonder what that means. What should they have been subject to valuation, and if not, why not?
Yes, so normally speaking, in the year of purchase, the purchase price is a solid indication of the value of that asset. So we're happy that within the first year of purchase that no valuation takes place, but does take place in subsequent years.
Christine?
So just for clarity, this is not the valuation for the purpose of acquisition. This is the valuation for the purpose of the asset register.
Okay, that's
I
noted.
think we were potentially conflating the two matters.
Okay, thank you for clarifying that.
Councillor.
Councillor Cantwell.
Yeah, just a quick one. On page 61 of the agenda pack, which is page 7 of the report, it says under our audit opinion of financial statements, it just says date in red. Is that because there was no unqualified opinion, or is that just left over, or?
So it remains that because this has to be published once we've signed, and because we rely on the date of management, well, those charged with governance signature, we don't want to put a date in that sort of indicates that we've already signed, but we also don't want to put one in the future if it hasn't happened. So it just remains in draft. But the minute we sign our financial statements audit opinion, we change that date that we provide both documents to management to upload onto the website.
Great. Any more questions for KPMG for James? If it is, any more? No? James, your 2 executive summaries were brilliant. Your explanations were very good, and I thank you for your auditor's report, which I read with great interest. Thank you very much. Well done. We move on now. Oh, sorry. The committee is asked to note and comment on this, which we've done. Is everybody happy to take this as noted? Great, well done. Thank you very much. It's been recorded by our officer here, so that's lovely. Right, item 2 is the draft external audit annual report. I'm going to ask. Sorry. Don't be done both. I'm not on the right page here. I'm sorry. Internal report. Here we go. I'm going to ask Matthew to present his report.
Thank you, Chair.
I'd flip my page backwards instead of forwards. Thank you.
Okay. Evening, everybody. Nice to be here. Page 79 in your packs sets out the summary of my progress report. And then I'll just take you through some details and then happy to take any questions on it. So page 85 is our performance dashboard. So that's just a good indicator for the committee about whether your internal audit plan is being delivered and whether it's being delivered on time. So 80% of the plan delivered at this stage is a really good place to be. We are getting progress with our internal audit plan. And I think, if we weren't, and there were some concerns about our ability to deliver that, or not being able to give an annual opinion at the end of the year, that would show up in this performance dashboard. So it's just generally a good indicator, I think, for the committee. If I take you to the following page, page 86, that just captures our feedback. So an important part of what we do and part of our audit standards is to get feedback from every audit we do. And I'm really pleased to say we have had 100% response from officers on all the audits that we've carried out. And the responses have been positive to date, but we're not complacent about that. We use the information that comes back to us to try and continuously improve what we do. And again, in terms of the committee, if you're seeing a lack of responses or some poor performance, we'll report that to you and you've got a chance to question us about that. Page 87 just gives you an update on internal audit and makes reference to the new global internal audit standards. So we'll be providing some updates and some training to the committee over the next 12 months on that. And the committee will start to see some slight changes coming through to make sure that we're all complying with those new global standards. Also on page 87, it just shows you the quarter four work that we've yet to do. So there's a cybersecurity audit. There's another cybersecurity audit, but more about staff awareness and training. That one has started. And then we're looking at the capacity and aims and priorities of the council. And that's the only remaining work that's really yet to start. The following page just gives you a review of the work we've done since we've last reported to you. And you'll see there's a limited assurance bank reconciliation, a limited assurance insurance, and a substantial report on housing benefits and council tax. And again, page 89 of your pack gives a summary of the work that we've done. So in terms of the bank reconciliation, we've just identified there for you the issues that we found. I think that the key thing for internal audit at the time that we did the review was that the bank recs were not all quite up to date, but a lot of focus and resource had been put into bringing those back up to date. They're a kind of fundamental financial control, and so they should be in place. And we also just wanted some assurance for officers that once they got bank recs back to being done regularly, they could maintain that position and it wouldn't fall away again. That was kind of the key issues coming out of the bank.
Can I just ask a question?
Yeah.
Why was the bank reconciliation 3 months behind? How did it get that far? What was the outcome of your investigation?
I think that's probably a question for officers, with respect, Chair.
Well, ask the officers in a moment then when we come back to them, because I'm keen to know why we've got 3 months behind, and I'm keen to know how it happened and why.
Thank you, Chair. And then the other summary is on insurance, which was which we gave limited assurance. So the Section 151 officer requested that we look at this midway through the year. And so I think, again, it's a good indicator to the committee that we've got the resource and we are able to change our plans slightly and accommodate this. This fundamentally came from the council going out to re-tender for its insurance providers. And actually the insurance information wasn't really up to date to be able to do that. So it's when they went to re-tender, they didn't have accurate, up-to-date, complete insurance information to be able to do that re-tendering process. So we came in and did an internal audit of that. I think some of the key things we found were there was a lack of kind of ownership and roles and responsibilities around the insurance function. I think the contract management and management oversight of insurance could be improved. And obviously there was that slight incompleteness and inaccuracy on the assets and the insurance values and those records that the council would then use to go out to re-tender. And that means there was potential to be at risk of not complying with the 2015 Insurance Act. So I think the audit was hopefully really useful. I'm sure members might have some questions, and there's officers here or myself that can pick those questions up. The report then just goes on. I think if I can just take you to page 94. So again, that's just very clear oversight to the committee of where we are with your annual plan. And you can see the assurances that we've given so far in the last column and the work that just needs to be completed and finalised for Q4. And then Appendix 1, Chair, on page 96 is where we report any overdue actions. So this is where we make a recommendation in our audit. We have a date agreed with management for that recommendation to be actioned, and then we follow those up and let the committee know whether those are being completed or not. Again, this is a very good indicator to committee on how well management are responding to internal audits and kind of plainly speaking, how seriously they're taking them. There's 3 here, 2 are medium priority and 1 is low. So just in terms of general internal audit services, that's a really good position to be in. That's a very small amount of recommendations that haven't been done on time. I think what the committee should consider is there's a request really for extending the dates on some of these, which is clearly laid out in the report. And the committee just needs to be assured that it's happy with those. And although there's a risk that's been raised there, they're happy that that's being managed until these actions are completed. And that's it, Chair. I'm happy to take any questions.
Thank you, Matthew. First of all, thank you for the executive summary. As with the KPMG, it's easy to look at the information, it's easy to follow what you're saying, and then you've got some indication what's happening in the main body of the report. I would like to take the issue of bank reconciliations. I'd also like to take the issue of insurance, because I'd like to have some assurance that, that these things won't happen again. I can't understand how somebody in a business is not letting bank reconciliation go by the wayside. And also, insurance is very important in any organisation. If you don't let your insurance work for you, it runs out or there's a problem, you know, you've got major issues here. And this organisation can't afford to have that problem. So can somebody just enlighten us what happened to the bank reconciliations and what happened to the insurance?
Major, I'll take the bank reconciliation matter first of all. So the issue was first identified to me January of last year, and as much as the bank reconciliations were not being completed, the bank reconciliation activity was being undertaken on a monthly basis. It's just the monthly signing off of the bank reconciliation was not being completed. And there's a multitude of reasons for that regarding staff resources, capacity, turnover, changes in systems. There are 9 bank accounts across the 3 entities to reconcile, 5 of which are in Boston. But as soon as it was identified to me that we had a situation, and also to this committee, I believe KPMG had previously identified bank reconciliations being a concern. It's also on page 38 of your agenda pack with you tonight. Management action was quickly initiated to resolve and clear the historic backlog, shall we say. So management action that we took was daily management or daily monitoring of the team activities and the output. So we actually had a very clear activity plan as to what the team were doing on a daily basis. That action plan was then reported up to senior management and was also notified to the council section 151 officer as well. So it's disappointing of the backlog, but obviously from a reassurance point about preventing it going forward, what we have done going forward is put it as a KPI, key performance indicator, for the service level agreement for finance. So what that means is on a monthly basis, we report that we will achieve bank reconciliations within 10 working days of the month end. And since September, we have been achieving that. So the latest set of bank reconciliations, which was the end of December, they were signed off by the 7th of January. There's much more stringent management oversight now of this activity, and it is reported and escalated when it is not being achieved within those timelines or when we're more aware of it.
The other thing I was noticing on this report from the auditors, internal auditors, is about the manual processing. It sounds like there's a lot of long-winded sort of processes to get information together. I thought this day and age we're all computerized and all sort of really, you know, all singing and dancing a bit. It doesn't sound like that to me.
That is part of the challenge with the bank reconciliation. It's quite a manual process. They say there's 5 bank accounts for Boston to reconcile. That's quite a significant, you know, more than I would see in an authority. One of the partnership councils only has 1 bank account that has to be reconciled. So what we are doing at the moment is there is an income management system upgrade, which will hopefully create efficiencies within the system. And then once that is complete, Ellie, who's the Deputy CFO for this area, will be undertaking a review to identify where are there automation opportunities within the system as well. So we've got an eye to the future, if you like, really, as to what can be automated, demanualised, for want of a better word, to ensure we actually create that capacity within the team to allow us to have the capacity to do this more frequently or more regularly.
I think that's an important issue that we ought to be looking at in a very serious manner, because I think long-winded manual processes are time and money, aren't they? And also, you know, if it's going to hold things up and we're going to fall back behind again, it's going to give us a problem. I thank you for your response on that. I'm going to let other members have questions on the bank reconciliations. We'll come back to the insurance in a second. Adam.
Yeah, I did just want to ask a follow-up on bank reconciliation. It's just around a sort of quite niche issue about staff upskilling and training. That is mentioned in the report, so I appreciate you've identified it, but it would be helpful to have a statement about what is being done in terms of induction and any upskilling that might be needed, because it sounded as though there wasn't really much of a formalised plan there, and you would you're sort of relying on desk-based knowledge.
So the recommendation for the bank reconciliations identified there was limited work instructions. So when there was new starters, we didn't actually have formalised work instructions. They have since been drafted for each bank reconciliation and are due to be signed off by the end of this month. And then once they're in situ, we're then undertaking an assessment of skills and knowledge within the team to understand where those training deficiencies are, and also to help us develop a training plan for when there are new starters or turnover in staff going forward.
Thank you for the response. Councillor Mountain.
Thank you, Chair. Good evening, everybody. Going to page 91, page 11 of the report for the insurance. I've got a couple of questions over this. My first question is on the line of the internal auditors identified there was no established process for maintaining the council's asset registers for insurance purposes. Is that now resolved at this process in time, and are we compliant?
Absolutely, Chairman. So part of the reason I wanted the audit undertaken was to actually understand where we had some challenges within the system where action was required. So I think the output from the insurance audit, similar to the P card audit, has had a very positive reaction from managers in terms of addressing some of those areas of concern. So I can report that our new procurement is on track. The data is on track to be supplied and has all been reviewed. The assets team has also brought in a new IT system again, where it can load that data into it and have it readily available to it. So the position you're in now is substantially ahead of where we were when we undertook this audit, but that was the purpose of the audit.
Brilliant. Thank you very much for confirming that. And to be honest, that's why I thought it was flagged. My main concern over obviously something of this highlighting is obviously we've outsourced a lot of the management to PSPSL, which I understand, but then to be outsourced again to another third party, it gets weaker every time it is outsourced. And that is where my biggest concern over this is. The fact that nobody has taken responsibility over this. How many hours have been lost from the council's officers by having to re-input information over to PSPSL? And ultimately, as this has been subcontracted again, from what it appears to be, if we were to suffer a loss where we believed we were being covered, would PSPSL take the loss?
If I may, Chair, just to clarify regarding the outsourcing arrangements to the risk factor TRF, insurance is a regulated service and PSPSL are not regulated to provide insurance services, which is why the risk factor. So there was an audit undertaken about 3 years ago where it was identified you were at risk in essence in that respect, that PSPSL providing a service they were not regulated for. That's the reason why TRF were brought into the picture. The records that have been referred to were the same records PSPSL held that would have been transferred to TRF. There's no change in those records, as Christy sort of alluded to. There was action required in the system that needed enhancements, responsibility. There's obviously conversations happening between myself and Christine at the moment regarding insurance administration overall. There's also a portal called the Insurance Portal that has now been launched, which was actually a central database for officers to access information regarding any insurance certificates. There's also a mechanism or methodology in which they can report information direct to TRF. So there's not that third party instance, if you like, really. There's still some refinements of the rules of engagement, shall we say, but it's in work in progress.
Christine, you want to pop in?
What I would say is now we've sort of got our house in order, so to speak. What I'm interested in now is getting the data into a situation where we can look at, for example, prevention. So in terms of not only, it's inevitable you do have insurance claims for one thing or another. So we need to look at what we can do to prevent those claims. So the next piece of work following where we are now is actually using that data within services. For example, considering things like advanced driver training and initiatives such as that to try and promote a reduction in incidents and claims. What that then does is it means when we go out to tender, you get a better price back. So it's about trying to manage the whole system, but we are significantly ahead, as I said, of where we were before.
Who's taking control of the insurance on behalf of us? Who's managing that process?
So in terms of the, if you like, the insurance responsibility, it sits with the 151, but through the SLA, it is PSPS that provide that service. In terms of the individual services, they all take responsibility for ensuring they have adequate insurance for their service. So if it's vehicles and drivers, if it's property, if it is heritage assets, it's about working through all of those components, which is effectively what's just been undertaken in preparation for the procurement exercise, to make sure that everything that can be appropriately insured is being appropriately insured. It is not possible to insure every single eventuality because some things can't be insured. But we have certainly done undertaken a very thorough review to end up where we are ready for the procurement process about to commence.
That's a very detailed response, Christine and Samantha. Thank you very much. Do you want to say anything else at all? Are you
I'm happy with that, Chair. Thank
Thank
you.
you. Councillor Cantwell.
Thank you, Chair. Just a couple of questions for me on the insurance as well. Could you just confirm, was there any blurred lines between PSPS and the council which resulted in this issue, or was it unique from anything to do with that?
I think it's more a case of clarity around responsibilities. I think it is a fair point that there are three parties involved in this. There is ourselves, there is PSPS as the administrator, and then there is TRF. So one of the key components of the audit is making sure those responsibilities are very clear.
Thank you. If I may, Chair, I think I'm starting to see a small pattern occurring with PSPS, and it does seem on complex issues where there is shared responsibility, such as bank reconciliation, such as insurance, it tends to be that's a common theme of an issue, that there are not blurred lines as I put it, but there are issues. And I wonder if that's a wider piece of work that needs to be looked at in areas where it is quite complex and there are multiple parties involved. Is that something we need to look at across the board to ensure that there are no more issues that cropped up like this going forward? And I'd just say that your comment, Chair, about the manual process that has to be done, I remember you making that comment a good year ago. So I think it's important that changes are done and we are updated, because if we were talking about that a year ago, I think certainly it would have helped us now.
Yeah, I take your point and I understand what you're saying. I mean, there's a lot going on that we don't understand and don't know about what PSPS do, and I'm not standing up for them, but I think they've had issues and they've been very upfront about some of the issues they've had, and they've also spoken about some of the frustrations they've had as well. So it's, there's a lot of things that's happening. Those 5 bank accounts you talked about, is it not coming up, whittle them down into 1 or 2, for example? Because I think 5 bank accounts is extortionate. And I also think the manual process, it is worrying. And I agree with Councillor Cantwell, because manual things tend to go a bit astray and they tend to go off the rails a lot. So I'm just concerned we ought to get very much, into computerization with all that sort of stuff. You know what I mean?
We will investigate or research what is possible from an automation point of view. The 5 bank accounts were what have always been in situ at Boston. It's not something that PSPS has introduced. It was in situ prior to the services transferring. So that's when we need to understand what transactions, which customers are paying into those bank accounts. If we do change them, making sure it's seamless to the customer behind the scenes, so they don't have any issues. We don't want payments for council tax or business rates not going to the correct area. So that's why we need to be very careful to understand what transactions go through those 5 bank accounts and can they be rationalised. So once we have the income management system, which is the first stage of automation in situ, which is due to go live at the end of this financial year, that will help create some efficiencies. And also that was probably the first tranche, I'd say, in your automation project for income management, is actually having the portal, right, really the system now that is consistent across all 3 councils. So at the end of the financial year, each authority will administer income in the same way. So that is the first step, if you like, really, but it's not the last step. It is just the start of the process.
And you did say that other councils in our group don't have 1 bank account. I think you said 1 bank account. Here we've got 5. So
If they can operate with one bank account, why can't we? And if you've got 5 lots of transactions going, then you can record the transactions separately, and the bank account can just where you put all the cash into, or all the money into. I mean, to me, are we just creating work for the sake of it with all these bank accounts? Anyway, that's for another day.
Christine, want to come in?
Well, just before you do, what Councillor Cantwell said, he was querying about the issues of, you know, what's going on and the sort of flaky bits and the fluffy bits. What's your response to his question?
There have been, as been reported, a number of mitigations, reasons given for some of the challenges. But what I'd like to give the committee assurance is, as we become aware of these issues, we do try and resolve them as quickly as possible and provide that journey, if you like, really, of how we're going to progress that and how we're going to prove that as we go forward. The bank reconciliation, as soon as it was come to light, swift management action was taken. There have also, as CFO or as head of the department, I'm working with my deputies to understand how we can identify or work together or sort of improve our services to reduce demand, increase capacity. That is the tagline we're trying to look at, is how can we be smarter, be more efficient, be more effective. There's a new upgrade to the finance system coming on board in the new financial year. There's other things we can do to enhance our service offering. There has also been a significant amount of backlog that the team have had to overcome. It was really pleasing to hear from James that Boston is one of the few authorities in the country where actually has given assurance to its historic balances and its balances ongoing. That is quite rare at the moment. There has been a number of audits for 23-24 and 22-23 where they've been published as disclaimer opinions. Boston is not in that position. That's a result of the team working with officers and the council to achieve that outcome for the authority. So as much as there are issues and there are challenges, there's also been positives. There's been good outcomes from there as well.
Yes, I was on an audit and governance training program a couple of weeks ago over a weekend, and we covered all sorts of issues. And I got a certificate because I was quite, I was quite pleased that I went through all that 2 days worth of, information that I brought home with me in my head. So it's useful. I understand where you're coming from, and I appreciate what you're saying. We're here to make sure that assurances are in place, things are happening. I would like you to think about why we need 5 bank accounts and go and talk to somebody in the council and say, is there any way we can push these into 1 or 2 or whatever? I just think, are we creating work for the sake of it? And I'd also like to think we can get this manual thing cleared up and see if we can try and get it moving into some sort of computerized system. Otherwise, we'll be talking about this again in 12 months' time. And then basically, we were going to get frustrated that things aren't going in the right direction. Christine, you wanted to come in, didn't you?
There's just a couple of points I'd make. Is I wouldn't necessarily compare bank reconciliations to insurances. The bank recs are clearly sitting within PSPS for them to reconcile and deal with within the accounting system. With regard to insurances, it is more complex. There are 3 hands on it. However, that could happen even within the council. You could have 3 services all having different components of it. The main issue is about having clearly defined roles and responsibilities and deadlines and monitoring of that. It doesn't matter where that sits as long as that is happening. What I would say you should take comfort from is the fact that we are clearly addressing the issue of audit activity. You've only got 3 outstanding. Proactive management action is occurring. So when these issues are being identified, which is why I have comfort in the audit process and the audit team, is that we bring these difficult audits forward. Well, first of all, we are. And when they are brought forward, then we are proactively managing and dealing with those issues. In terms of one final point I'd make is in the current environment, recruiting really competent and capable finance staff is really difficult because of the national shortage. And those of you that may not be familiar with that, there has been a huge amount in the local government press recently, and SITFA and LGA have launched a national programme with a view to increasing interest in local government finance as a career.
Yes, I appreciate that, because that was something that was discussed a few weekends ago and I was on this training programme. as much as I hear what you say, Christine, and same with Samantha, you know, it's our job to ask the right questions. And if we're not sure about something, or we don't understand something, or we're not happy about something, it's for us to ask the right questions of the officers. And I don't understand insurance, and I know there's three parties. There's the broker there that does the insurance, and somebody is managing it from PSBS, and somebody is managing it from the council. I understand all that, so there's not an issue with bank reconciliations and insurance as far as I'm concerned. Right, let's move on.
Matthew, want to come in?
Matthew, I'll let the internal auditor come in. Matthew.
Yeah, thank you, Chair. Just to sum up as well, I think I like the question about themes. I think for me that just supports that the committee is seeing some good reports coming through, and a couple of these are limited. Lots of your work isn't, but where we get a lower level assurance, we will also follow that up for the committee and report that back to you. And there's a very clear view for the committee on seeing these actions being put into place and seeing probably better assurance opinions when we do the follow-up work. I think the other thing is I'm just in the process of looking at next year's audit plan, and we do keep a focus on risk. So if there are themes or areas, we will try and build that into our audit plan, and you will continue to get that transparency reported to you, which means you can ask those questions and get that confidence. Thanks, Chair.
Yeah, thank you, Matthew. I mean, we'll have every confidence in what you're doing, along with Samantha and Christine. So I do appreciate what you've all said. I understand about the staffing issues and in the finance areas. So, you know, you've heard what we've had to say. You've taken note of all the things that we're concerned about, and I'm sure you'll take it away now and make some noise and some movements going forward. Councillor Gleeson.
Thank you, Chair. Turning to the multiple bank accounts we have, I don't really think there's a role for PSBS to see why we have that. I think we as a committee should be asking for a report about the bank accounts we have, what they're doing, why we have 5, and what is the way forward. So I mean, I think it's for us to drive that, not you know, to see. So I think we should have a report on that. And then I have a question, not about insurance or banks. Is that all right? Thank you. Yeah, and it's on this bit of paper, which I've got the right way up. We've got the overdue, medium and low priority actions. I'm on page 16 or 96, depending on how you look at it. So we've got an original due date and a current due date. And for the first one, it sort of makes sense to me because it was originally due December last year, or 23, and the new date was December this year. But the next two, the original due date and the current due date, is the same. So how is it late?
Give us an answer to that, Matthew.
Yeah, thank you. I mean, it's just a kind of reporting quirk. I guess this is the first time that it's been asked that these be extended. So the original date is kind of the same as the, and in the final column, I think that's where you'll see that kind of request for a new date. So until kind of committee have said, yes, we're happy with that, I'm not putting the new date in. So I'll try and make sure that's clearer next time.
Okay. Councillor Gilbert.
Yes, thank you, Mr. Chairman. It's very reassuring to see that there will be a move away from a reliance on manual quality assessment processes and that funding has been allocated, and that was in September 24. I just asked the question, how much funding, is it sufficient, and who's responsible for providing that funding?
Apologies, Councillor Gilbert. Can I just double check which page of the report you're referring to?
Referring to page 93. So it's reference to operating a manual quality assurance assessment process. We're obviously moving towards a better process going forward, and funding has since been allocated. I just wonder if it's sufficient funding and who's responsible for providing the funding.
I don't have the answer for that question because it's in relation to the housing benefit audit, but I'm happy to take that away and speak to the officer who looks after that area.
Councillor Danny.
A simple question. Since we talk about the 5 accounts we have, can we know what kind of accounts we have? If it will be savings, I'll be very happy to see that we are saving some money.
There'll predominantly be accounts for the receipt of income and the payment of supplies. So any income the council receives for business rates income, council tax, any rental income, you might get any sundry debt income, it'll be used for that one, and any when you're making any payments out to your suppliers, to your housing benefits claimants, any other external payments, that they're the 5 bank accounts we're referring to. It's your ins and outs, if you like, really, it's your daily activity.
Sorry, that's all the accounts. So you have different accounts for different incomes, different payments, different, so everything is spread. Is that correct? Yeah.
Yeah, so we have 5. We've got council tax and NDR instalments, payments, a general account, and the instalments and NDR are separate. Oh, instalments and NDR are separate.
Come back. Will it not put a lot of strain on the borough council to look after all these accounts instead of having one and having your outings and your ins? And I think that's the simple thing in business. And I mean, I've been doing it for a long time. One in, out, you control, your money, and you manage your account perfectly well instead of having 5.
If I may, just to give some context to the volume of transactions that are going to be going through these accounts on a monthly basis, particularly the first of the month, when every resident in the borough will be making their monthly council tax instalment. There's thousands of transactions going through these instalments when we're doing the direct debit run. So we need to make sure that the bank accounts are take on board Councillor Gleeson's points, but making sure they are fit for purpose and reflect the ins and outs of the activity of the authority.
I'm very comfortable what you just said there, and I appreciate your question there, Councillor Danny, but I'm happy what you said. I'm very comfortable. I think we've had enough discussion now on the internal audits, and I'd like to thank Matthew for a very comprehensive report. I'd like to thank Christine for all her responses. I'd like to also thank Samantha for all her responses, and I think we're all very much assured here now that things are going to start happening and making a move. Right, we're going to move on. We're going to move on to, so can we just note, everybody happy with all that information, and we can just get the officers to record anything? Oh, Christine wants to have a quick word.
I just wanted to, with reference to an earlier question regarding Parkwood, the new company is creating Active Futures, which is part of the Parkwood family, effectively. I just wanted to update because obviously it was Lex Leisure before, and then they went through a process in consultation with ourselves, and just wanted to update on that.
Yeah, they keep changing the name, don't they, these people? Because I'm a member. 1 minute I'm a member of one thing, then another, so they keep changing the name. I won't go any further than that. Noted, thank you. Can we just say that we've noted everything on that report, and everybody's happy for us to move on? The officer's taken the details, yes? Lovely, great, thank you very much. Let's go on to the risk report. I'm going to ask, that's on page 99 of your pack, I'm going to ask Suzanne to present that to us. Thank you.
Thank you. So this is the usual quarterly report for the risks as at the end of September. I'll take you through the covering report from page 99 and then take any questions that you might have. The strategic risk wording has been thoroughly reviewed by the lead officers, in particular around IT capacity and retention. The risk score for internal communication has been reduced. So there was an improvement plan for internal comms, and a lot of that work has now been completed. Those are things around having a lead officer in each of the directorates for comms, having resources for specific projects around communication work, improvements to the bi-weekly partnership update, and launching the new intranet. So a lot of good mitigating action has been taken, and that's why the risk has reduced from a high to a medium overall. There are 2 new risks for Q2. So we've got the local plan. Obviously, there's a lot of discussion at the moment from government around planning, and the Assistant Director has asked for this strategic risk to be added in so that we can keep an eye on whether the local plan is considered to be out of date. So I expect to have more information for you in Q3 about exactly what that looks like, but an early indication that that's a new strategic risk. And then also one around safeguarding. So those councillors who are also on the scrutiny panels, committees, will know that we've had the safeguarding policy has been reviewed and signed off by the 3 councils. And part of that is to identify that there is a risk around not delivering safeguarding. There are no specific concerns at the moment, but having it on this risk register just means that we have an early warning system. So if there were any issues around safeguarding, you would very quickly get to hear about those. And it is good practice from across the partnership. So 2 new risks on there. I would just draw your attention to the risk scoring matrix, which is at the bottom of page 101, and that shows the spread of the risk. So we can see that there are none in the red critical area, and there are 6 in the high risk category for the strategic risks. So these are budget, cyber and IT, Environment Act and waste, and capacity. So that feels to me that rings true for the authority, the areas of focus being money, staffing and service delivery. But that's a way of us checking that we feel that there is that assurance that we have the right risks on there. So I'm currently in the middle of the Q3 review. So obviously that's coming forward to SLT next week. And we're working hard with lead officers to get more detail into the risks around actions and dates. So there are some which we've talked through, where we're tolerating the risk. It says there are ongoing mitigating actions. And in some cases that's quite acceptable and that makes sense. I wouldn't want to lose those actions. So for example, on the budget risk, you have your ongoing reports to this meeting, and it's important we keep those on there as mitigation, but they don't have a specific date. But there are others where I definitely feel we can get some more dates in there for you, and we're working really hard on those. So I'm hoping I'm aiming for in the Q3 report to have some dates around the depot options, around round reviews in waste, something more tangible on capacity, and that might link into, I think Matt mentioned this capacity audit. So there might be something more in there we can link into, and some dates around net zero. So there'll be some more detail that will come forward in Q3, and that is certainly a work in progress. And I am reminding the lead officers of the request of this committee and others that we make sure that those dates are considered. So I'm pushing that very hard. Similarly, on page 102, we've got the partnership risks. So the wording has been reviewed by SLT as at the end of September, but again, time is moving on. And that's being reviewed again in Q3 because of the discussions around LGR and the current situation. So there'll be more of an update in Q3. But just to cover off the changes that already happened in Q2, which are in front of you, the likelihood of not having a clear shared vision has reduced because we have a sub-regional strategy in place now across the partnership. So it remains a medium risk, but it's a lower risk. The fear of one of the partners taking over has been removed as a risk by SLT. It was a potential risk when we launched the partnership, but experience tells us that the checks and balances in place are operating well and it's no longer a risk. Culture is similar to vision, so the likelihood has reduced. We're working across the partnership in more areas. We've got more shared policies, particularly around HR, so that irons out some of those initial differences in culture. It's still a medium risk, but it is not as likely as it was originally felt to be. And then finally, there's a new risk on there for partnership, which is around the importance of PSPS to the partnership, really. So a recognition that PSPS delivers services to all 3 councils, and individually it would be a certain level of risk, but to the partnership as a whole, it would be a larger risk. So if there were any issues with the working relationship, that would be a greater risk for the whole partnership. There's mitigation in there, and it's in the papers around the service level agreement in place, client liaison meetings, stakeholder board is in place, and a process for additional work requests. So it's a medium risk, but it is worth keeping an eye on in here. So again, the risk scoring matrix at the bottom of page 102 shows no critical risks for the partnership and 3 high risks around LGR, funding and staffing, which again makes sense to me, and I'm happy to take your comments on that. And I will bring you an update on LGR in Q3. And just very quickly at the bottom of there, the fraud risks are set out just underneath that matrix. And I'll be bringing more detail on the latest position with the fraud risks to a future meeting before the financial year ends, so possibly Q3 or Q4, but a bit more detail on those for you. happy to take any questions.
Yes, just before we do, can I just ask a couple of things? One of the things that was brought up on my training program, I hate to keep going back to that, but it was talking about risk management regarding employees and their welfare, health and well-being, mental illness and all that sort of thing. I don't see anything on here that says we're doing anything for the employees here.
Thank you, Chair. There's some element of that in capacity, but I will take that back to HR and talk to them about whether we need more information in there around specific health and mental health risks for employees. I'll
I
pick
think
that
we'd
up.
like to see
Thank you.
something a bit more detailed if we
Yeah.
could. I mean, staffing is one thing. Drilling down into some of the areas that we're talking about is another. And I think, you know, from all of us here, we'd like to see a bit more detail about what is actually happening with the employees, how we are looking at them, and what are the risks for the people that's being employed by both PSPS and the council. And the other thing is, on these high risk numbers, 15, 16s and whatever, how do we get a high risk thing? I know some of them are not going to move from high, but how do we try and manipulate them down or move them down to something more medium? What's the process that stops us from seeing all these high numbers all the time?
Yeah, so that's one of the areas I'm going through with the lead officers at the moment. There are some, for example, with the budget risks, it's very difficult to bring that down from a high risk because a lot of our risks are external to us and not within our control. But some of the other areas around the round routes for waste services, when those are reviewed and improved, that will make a real difference to the likelihood of that risk. So if we can bring that down, what we will be able to show in your Q3 report is that we are treating the risk. This is the action we're going to take and by what date, and that the likelihood and or the impact will come down to give us that score. So it might be something that we can cover in a separate meeting as well, perhaps a little bit of training for the committee to be able to go through line by line some of those examples so that you can understand how that process works with the officers, if that's helpful.
Yeah, I'm happy with that. I'm very keen to see some movement going down from high into sort of medium areas if we can, and that's where I'm coming from. Then it tells me that things are happening and we can see some movement. Whether there's any dates could be attached to these risks, when they're going to go from high to low, or we're working on this, and this is going to happen in 4 months' time. Be nice to see some movement. Okay, right. I'm going to go down to questions. I'll start with Councillor Gilbert.
My question actually relates to BBC 12, 13, 14 and 15. I mean, some of those are high risk, some of them are medium risk, but I just wonder whether the new food waste collection services, which has a time scale attached to it, which we heard about the other week, whether or not that really needs to ensure that there is action taking place quite enthusiastically to resolve some of these challenges, because there will come a point when we have to start doing this by law, and we will probably need a larger depot to facilitate the increased collections.
Yes, thank you. That's one of the areas I hope to have a better update for you in Q3, because this was done as at September, but we'll have more up-to-date information in your next report.
Thank you.
Councillor Mountain.
Thank you, Chair. Just touching on what you were saying with mental health, reading between the lines, and again, sort of BBC 15 and BBC 16. I know this is a low risk, but when you start putting existing control measures in place, you know, you're trying to ensure that the staff are finishing on time at the end of the day. To me, that's a low risk for this, because we're trying to ensure that this task is being done. But actually, the pressure on the staff to maintain this as a low is quite high. And that's what I really wanted to touch base on with the mental health. Same with, you know, the stretch on the existing resources. Down to emails and things like that. You know, to keep these medium and low, it appears that we're putting more of a stress on stuff that isn't being monitored.
Any comments, Suzanne, on that one?
Just to say, really, I think they work together. So the idea of reviewing the risk of capacity is also to consider how is that impacting on staff. So it's not to put more pressure on staff to say they must finish at a certain time or that they have to abide by certain rules. It's more making sure they understand that they can raise with their line manager or with others where they're not able to for a reason. So if it's because of workload, that they can, there are lots of different ways that we can raise that information and get it addressed. So we're not expecting people to just follow the rules and feel more pressure. There's lots of things underway. I won't go into detail now, but that are available to staff for their mental health wellbeing and health wellbeing, and probably that some of that will come up in the audit as well. It wouldn't necessarily go into the risk register, but I think you're quite right. I can put more of a link in there to explain how that's working, so that from a risk point of view, you have that assurance.
No, thank you very much for that.
Councillor Gleeson.
Thank you, Chair. I realise this is the Q2 report, and Suzanne's already said that there's going to be local government reform is going to be a risk now. But surely, in truth, local government reform or the threat of the various bits is actually going to impact on virtually all our categories. So that it's slightly more than just adding. It's going to actually change everything, isn't it? Really. I mean, retention of staff, for example, and various other things. So it's actually going to impact the whole report.
Yes, it won't just be the LGR risk that is being reviewed. It will be the whole register in light of LGR.
Any more questions for Suzanne? Councillor Danny.
Thank you, Mr. Chairman. I just want to touch on two things. I think there will be a high risk, in my opinion, is you talk about the safeguarding. And as we know that Boston is the highest in the country in universal credit claiming, and then probably our child poverty, it's higher as well than 35%. So I think these things we can put it on a high risk, because I don't know what the future will be, bringing us. And the second thing is the market, which is the Boston market, Wednesday and Saturday. I have heard from the traders that some of them, they will be leaving because the prices is going to go up. So that's a high risk for the market to disappear within probably, I don't know how long, few months. So it's just to be cautious with these two things, because we will not know what we want to keep the market, and we want to have residents in Boston who live in a good town, actually, and have a good life. So thank you, Susan.
Thank you. I'll pick those up with the lead officers.
Please. Thank you very much, Susan. Thank you.
Any more questions for Suzanne? Just before we move away from you, I am concerned about the employee risk management situation. I don't feel we've got a detailed report. I don't feel that I've got enough information that I'm satisfied that these people are being looked after as they should be. And I would welcome further information of any risk management in investigations or reviews that you're going to be doing, because I think, to me, that's something we should be looking at high on our agenda. Because if people are struggling and stressed out and haven't got enough staff to deal with some of the issues that we're talking about today, that really is going to be a major risk in my view. And I'm very keen to make sure employees are well looked after, and the right things are in place to keep them in their jobs and retain them. Okay. Yes, Carol. Yeah.
You've reminded me that I was also going to say, if there are any other specific risks that people would like to raise or get more information on, I can invite the lead officer to come along to the meeting. There's nothing at the moment that I would flag up in particular, but if we get to that point, or if one of the risks is increasing, or something like that you've mentioned today, that it would be better for the lead officer to come and talk to you about those, then we'll make sure we pick that up on the future agendas.
I'd like to invite the HR person responsible for the whole of the PSPS operation and the council, let them come to a meeting and give us a reassurance of how the staff are being cared for and catered for. So that's something I'm going to leave with you. And I'd like to get that recorded, because I think it's important we understand just how those things are happening and what's happening to them. We have a great responsibility as an audit and governance committee to make sure that, our people are well looked after.
Chairman, just to complement what you're saying, if we get even the figures, how many hours are lost during a year, with the working hours within the Boston Borough Council? Because I do believe that thank you.
Can I leave it with you to look at the whole of that area? Because I do feel there's a lot of stuff missing there that we need to know about, and I'd be very welcome to receive it. But as usual, Suzanne, thank you for your report. It's very detailed, very easy to follow, and always a pleasure to see what's going on. Like to see some dates somewhere where the movement's going. If we can see that, it would be helpful to us to see progress. Okay? Everybody happy? Can we take Suzanne's report as noted, and everybody happy?
Yes.
Lovely, thank you very much. We'll move on. Let me see where I am now. What page am I on now? I think it's over to Sean now. Are you okay, Sean, to give us your report?
Yes, that's fine, thank you.
Good.
Yeah, the report on page 119 is an update on the changes to the statutory guidance, capital finance guidance on minimum revenue provision. Statutory guidance on minimum revenue provision prescribes how councils calculate their annual MRP charge, that's the minimum revenue provision charge, for unfinanced capital expenditure, which makes up its capital financing requirement, which will be referred to as the CFR. As this is a Treasury report, it's being brought to Audit and Governance for scrutiny prior to its submission to the Council on the 3rd of March 2025. By way of background on point 1.1, the Council approves a capital programme each year, and as part of that budget setting report, this capital expenditure can be financed from grant receipts or the use of reserve balances such as capital receipts and other reserves, etc. And where capital expenditure is financed, there is no requirement to make an MRP charge, so we can ignore that sort of expenditure.
Can I just ask, is your microphone on, Sean? Because we can't hear down here.
Sorry, I'll move it a bit closer.
Yes, please.
Thank you. Where capital expenditure is unfinanced, this is where it creates an underlying need to borrow, and which subsequently increases the council's CFR, and this requires the council to charge MRP annually over the lifetime of the asset where the capital expenditure is being incurred. The council is required to approve its MRP policy ahead of each financial year as part of the budget setting report. Paragraph 2.1, on the 10th of April, Secretary of State issued capital guidance on minimum revenue provision, 5th edition, which replaced the previous version of the guidance. New guidance, as it was issued towards the end of the financial year, early new financial year, effectively the accounting period on or after the 1st of April is when it's being implemented. The first charge of MRP is made in the first full year after the year of the expenditure is incurred. And the first area of change refers to unfinanced capital loans. I don't propose to dwell on this area because at the 31st of December, Boston Council had no unfinanced capital loans, so are unaffected by that. Paragraph 2.6 refers to unfinanced equity investments, which also picks up property fund investments. Under the new guidance, the council must make MRP and cannot defer making MRP on the basis that the debt is associated with an investment asset that the authority believes will retain or increase capital value, which is the approach taken by the council currently. The council currently makes an annual MRP charge of £50,000 in respect of its unfinanced property fund investments. From 2025-26, the council must make an annual MRP charge based on the lifetime of the asset, and the guidance states for equity this must be charged over a maximum useful life of 20 years. But where it can be proved that the underlying asset has a greater useful life than 20 years, then a greater life can be used. As the underlying asset of the property fund investments are property, it will be recommended that the council uses an expected life of 50 years when calculating MRP rather than the 20 years, and seek an appropriate professional opinion that confirms the acceptability of this approach. The council has the option to use a straight line method or the annual method for calculating its annual MRP when considering the lifetime of the asset. Where the annuity method is used, guidance states that an authority should use an appropriate interest rate within the annuity calculation, and typically local authorities tend to use the weighted average of the authority's external borrowings, PWLB annuity rate at the date of the change in MRP policy, or the average PWL annuity rate for the financial year, and the council will be recommending to use the annuity method for equity investments based on the PWLB annuity rate at the date of the change in the MRP policy. Based on a 50-year term, this rate is currently 5.94% when this report was written, and as of today, that interest rate would be 6.04. So as at the 31st of March 2025, the council will have just under £16 million of unfinanced property fund investments, excluding the M&G funds which are being liquidated by the fund manager. And it can be seen from the Appendix 1 on page 126 that over the next 5 financial years, the annual MRP charge and budget pressure based on the unfinanced equity position will be as in accordance with the table at the top of page 123. So you can see there in the first year, the MRP charge will increase by £5,248.52 based on that 5.94%. It will be slightly lower if the 6.04% figure remains. And effectively what will happen over the lifetime of the asset, you will see there at the in the Appendix 1 at the back of the report that the annual MRP charge will increase over time to take into account the time value of money, etc., from an initial payment of 55,000 through to a final payment in year 50 if the assets are still held and property funds still held at that time of 933,000. The recommendation is that note the changes to statutory guidance, capital finance and guidance on statutory minimum revenue provision. 2, consider the proposed changes to the 2025-6 MRP policy at paragraph 2.7, which will be recommended to council as part of the budget setting report. And note the increased MRP budget pressure on the council in relation to its unfinanced capital equity position on property funds starting from the 2025-6 financial year. Happy to take any questions.
Sorry, I was just chatting there to Amanda, just to get a couple of points. Right, Christine, let you go first.
So this is quite a significant report for the authority. Previously, we were not taking MRP for these assets because these assets have a value. And when they are disposed of, we will get that receipt back. So if we were to take this to the end of the term for 50 years, we would effectively have all of that money sat in our bank account. We would sell the assets and then have it there again. So effectively, it is a doubling up situation. The reason the government have brought this in partially is to seek to suggest to councils that perhaps that's not a direction of travel they wish to take for their investments, because effectively when you make that MRP charge, you can't reverse it back out. So effectively, for every year that passes, we're effectively putting money aside, which will sit in our cash and sit in balance sheet balances, but will never be accessible again to the revenue account. So it's a bit of a doubling up situation is probably the best I could describe it. We are a little bit where we are. I've already spoken to members about plans in respect of those investments for the longer term, and Sean will be bringing forward a report in due course to the committee, and I'll be briefing the new 151 on that. But this is very significant. We've been preparing for it for some time. You remember step 1 was actually to divest ourselves of the PWLB debt, because if we were to divest ourselves of the assets before the debt, we would suddenly have to get rid of the debt quickly, and it would not necessarily have been advantageous to do so at that point, when it certainly was advantageous at the point we did. So we continue to work through this, but this is a separate report really to update you on the fact this is now coming in. We are therefore going to make those allowances, but we need to proceed as originally planned.
Okay, thank you, Christine. Councillor Cleeson wants to speak.
Thank you, Chair. I'm working on the assumption I didn't understand any of that. So basically, we own a load of property and we actually have no debt on it, but we've got to put money aside from our revenue account to pay for the money we don't owe anybody.
Yeah, that's exactly what it
is. Is it? Yeah. Why don't you just sell it? Wouldn't that be easier? But I mean, and again, though, you know, so what happens? Just at the side of the country, what happens to this property fund when we disappear?
it would be novated to any new unitary if that was
Okay.
where what was replacing us. For example, the balance sheets would be combined between any relevant authorities and a new balance sheet created, and they would be transferred to that new organisation.
But I mean, has anybody said to government this is stupid?
There's lots of people think.
My comment during the consultation to officials was it was like a double prudence, because we have the assets have a value, and we can dispose of them and get the cash back into the bank, either at a capital gain or capital loss, depending on what the situation is. But there will certainly be significant capital there. And I always use the example of M&G. M&G has been disposed of successfully. It was liquidised, it's gone through due process, and we have had full capital value back, bar a small balance still to be liquidised from that fund. So there is no lack of security on that capital. However, through this methodology, we effectively have to pay for it again.
Do we, this money we're putting aside, do we at least get the interest on it?
You do indeed. So it's sat in, effectively at the end of the period, you'd have an additional sum of money set aside in your cash that you would be earning interest on, as well as then the disposal proceeds when they came in.
So if we were then to buy property with, can we buy property with that money? Because then you'd have to account for it again.
Correct. You'd be MRP again.
Yeah. So you can buy more property. Anyway,
Have we sort of satisfied your curiosity, Councillor Gleeson? Well, I think Christine's explained it very well. I understood it anyway, Christine. Thank you. Councillor Mountain.
Annoyingly, I'm going to have a poke at it as well. When did this policy sort of come in from central government? Because from the way this looks, it's very much a case of a council can, if managed well, and I believe this what is one of the things we've managed very well over the years, can derive a nice income and almost a nest egg to protect ourselves. With the failing councils that have gone up and down the country, is this almost a control tactic from central government to stop us investing in what could be a nest egg?
What I would comment is it is a natural disincentive, because when modelling this, if you were to model it now, there'd be absolutely no benefit to doing so. So, you know, you'd be having to set aside MRP, and it would be wiping out any gain you might be getting from it. So it effectively does make it very difficult. And similarly, use another example, if you had share capital and similarly treated, you'd have exactly the same situation. So a lot of authorities invested in companies, they'll have some share capital as well as loans in those companies, but that share capital, which is usually recommended to be about a third of the value, that now also has MRP applied to it. So it is leveraging the system and making it difficult for these things to stack up. Goes back to a big agenda around commercialisation, but with that also comes risk. These property portfolios do have risk. Some authorities have their own property portfolio. Others have done similar to this. These funds are heavily invested in by pension funds, so they're seen obviously as a very good, solid, long-term investment, which is why we did it. But we're not a pension fund, and therefore we have to account for it differently.
If I may.
Yes, by all means.
Just one, when did this obviously alter and come in?
So they've been talking about changing it now for about 2 years, but effectively it becomes live on the 1st of April.
Thank you.
Councillor Downey.
One, it's just a question, or because we were last time in training, I think, asset management, and something because the news going around the country is that the Labour want to diminish, you know, the borough councils and sort of things, and we do have a lot of assets. So what will happen if we think in 2 years' time, when it will be no Boston Borough Council and probably we have to convert to a town council? What will happen to our assets, our savings, our investments?
Well, that depends on what governance structures you have in place or have put in place between now and then.
it's a crystal ball and Christine hasn't got the answer to that one. Right, is there any more questions for Sean on that particular report? So I'm going to read out the recommendations. I want to as a proposer and a seconder. Note the changes to statutory guidance, capital finance, guidance on statutory minimum revenue provision. Consider the proposed changes to 2025-26 MRP policy, paragraph 2.7, which will be recommended to Council as part of the budget setting report, including the Treasury Management Strategy 2025-26, which will detail how MRP will be calculated on the unfinanced capital equity investments in property funds, and note the increased MRP budget pressure on the Council in relation to its total unfinanced capital equity investment in property funds starting from 25-26 financial year. Can I have a proposer?
I'm happy to second.
Right, Councillor Danny's proposed it. Councillor Mountain has seconded it. Are we all in favour? Thank you. All carried and favoured. Thank you very much. Right, Sean, on to your next report. Thank you.
Thank you very much. Agenda item number 6 on page 127, the overarching report, is the Treasury Management Policy and the draft Treasury Management Strategy Statement, Minimum Revenue Provision Policy Statement and Annual Investment Strategy for 2025-26 financial year. This report is the Treasury Management Policy and Draft Treasury Statement for the 2025-26 financial year and is included as part of the budget setting report that is submitted to Council for approval. As the report is a Treasury report, it is being brought before the Audit and Governance Committee for scrutiny prior to submission to Cabinet and Council. I don't propose to go through the overarching report. Propose to go first to Appendix 1 on page 133, and that shows your Treasury Management Policy Statement for 2025-26. There is no change to this in relation to the previous financial year, and this is basically the 3 clauses as per the SIPFA Code of Practice. Page 135 is the Council's Draft Treasury Management Strategy Statement, MRP Policy Statement and Annual Investment Strategy that is being proposed. By way of introduction, the Council is required to operate a balanced revenue budget, which broadly means that cash raised during the year will meet cash expenditure. Part of the Treasury Management operation is to ensure that this cash flow is adequately planned, with cash being available when it is needed. The second main function of the Treasury Management Service is the funding of the Council's capital plans. Paragraph 1.2, Capital Strategy. The SIPFA 2021 Prudential and Treasury Management Codes require all local authorities to prepare a capital strategy report. This is being included as part of the budget report. Treasury Management Reporting. The Council is required to produce Prudential and Treasury indicators and Treasury strategy reports. That is this report. A mid-year Treasury report each year, and also finally an annual Treasury report. In addition to this, the Council also produces quarterly reports. As far as scrutiny is concerned, the above reports are required to be adequately scrutinised before being recommended to Council, and this role is undertaken by the Audit and Governance Committee. Page 139, paragraph 1.4 refers to training. The SIPFA Treasury Management Code requires the responsible officer to ensure that members with responsibility for Treasury Management receive adequate training in Treasury Management. Training for members will be arranged as required, and the training needs of Treasury Management officers are periodically reviewed. Treasury Management Consultants, PSPSL, uses Link Group, Link Treasury Services Limited, as its external Treasury Management advisors for the Council. Paragraph 2.1 refers to the Council's capital expenditure and financing plans. I should add that these figures in this report are draft at this stage and are subject to change as the budget goes through its committee cycle. Following tables summarise the capital expenditure plans and how these plans are being financed by capital or revenue resources. Any shortfall of resourcing results in a funding borrowing need. And you'll see from that table at the bottom of page 140 the plans for the year. So from current financial year, 23.6 million, 28.2 million in the coming financial year, reducing down to 790,000 in financial year 2029-30. And you'll see that at the bottom of that table, the funding requirements, which results in borrowing requirement of 491,000 in the current year, and an increased borrowing requirement of 1.2, 465,000 and 3 million in 27-28. Council's borrowing need, which is referred to as the Council's capital financing requirement, This is the second prudential indicator and is the council's capital financing requirement CFR. It's essentially a measure of the council's indebtedness and so its underlying borrowing need. And you'll see from the table there that the current projection for the financial year ending 2024-25 is that will be just under 17 million, and that is projected over the next five financial years to be just under 20 million. Paragraph 2.4 provides a table of the expected core funds and expected investment balances, and there's a breakdown there of all the council's reserve funds. So you've got core funds in current financial year end of around just under £35 million, and you can see there from that table over the next 5 financial years how you're expecting those reserve balances to reduce as capital expenditure is being incurred. Paragraph 2.5 refers to the minimum revenue provision policy. This is what the previous report referred to, so I don't propose to go through that in a great detail because it has already been referred to. Paragraph 3.1 on page 146 provides you the current portfolio position as at the 31st of December, and you'll see there that the council held investment balances of just under £46 million at the end of December. Sorry, my apologies, that's at the 31st of March, the previous financial year. And at the 31st of December, that currently stands at £57.7 million. And the reason for the increase there is resulting from the recent government grant received of £17 million. And you can see there that at the bottom of that table, you've got £1 million worth of external borrowing, which is the Lobo loan. So you've got net treasury investments at the 31st of December of £56.7 million. And also at the top of page 147, that shows you how that is likely to change in relation to the debt. You've got borrowing, temporary borrowing and debt of £1 million at the moment, and that is expected to increase through to £8.5 million, which is subject to change as a result of the capital programme that is going through at the moment and the financing of that programme. But if that initial plan goes ahead, the borrowing would be rise to £8.5 million. And you'll see there as well the capital financing requirement line brought forward from the previous table to give you the under or over borrowing position of the council. So at the moment, at the end of the current financial year, we're expecting the council to be under borrowed by just under £16 million. And by the end of 2029-30, it's expected that the council will be under borrowed by £11 million. Paragraph 3.2 refers to treasury indicators that have to be set for borrowing. The operational boundary, there is no change to these figures. They remain at £15 million for the operational boundary, and the authorised limit, which is the maximum amount of borrowing that the council can incur, a total of £18 million. At paragraph 3.3, that provides the prospects for interest rates going forward. Link Group, as our treasury advisors, provides the service to formulate a view on interest rates, and you can see from that table where they expect the base rate, the bank base rate and the PWLB rates to be in the future. At the moment, their forecast for base rate at the end of the financial year is that it will be 4.5%, and the indications are from the market that the next reduction is likely to be in February, dropping that rate to 4.5%. I don't propose to go through all the commentary from Link in relation to the economy, global economies, etc., but it is there for information. 3.4 refers to the council's borrowing strategy. The council is currently maintaining an underborrowed position, and this strategy is prudent as medium and longer term borrowing rates are expected to fall from their current levels in the future. Paragraph 4 refers to the council's annual investment strategy. And this criteria is unchanged. So I don't propose to go through that in detail, but what I will do is I will pick up the main points. Non-specified investments, which are the more complex investments or investments over a year, that remains at £10 million. Lending limits for financial institutions or parent groups is £5 million, and money market fund maximum £7.5 million. And no maximum limit with the UK Debt Management Agency in view of the fact that it's effectively the UK government. Investments will only be placed with counterparties from the countries that listed at paragraph 4.3, referred to in paragraph 4.3. And also the council's investments will always be denominated in sterling. Creditworthiness policy on paragraph 4.2, page 156. The council, as referred to in many meetings, utilises the services of Link Group in relation to their creditworthiness service. I have explained that on numerous meetings, so again, I don't propose to go through that, albeit it's safe to say that all credit ratings of financial institutions are monitored daily. Council's investment strategy, paragraph 4.4 on page 158. In-house funds, effectively you can get greater returns at the moment. They are usually greater returns obtainable by investing for longer periods, and where possible, the council will look to maintain their yields on investments by investing long-term where it can actually do so without incurring issues in relation to short-term cash flow requirements. Investment return expectations for the next 5 financial years is shown at the top of page the table at the bottom of page 158. But effectively, the current forecast shown in paragraph 3.3 includes the forecast for bank rate to fall to a low of 3.5%. We have to make a limit for investments over a year, and the table at 159 shows that the council will invest a maximum of £10 million in investments greater than 365 days, excluding its property fund investments. And at the 31st of December, the council holds no investments in excess of a year at the moment. The prudential indicators for capital prudential indicators for 25-26 through to 2029-30 are shown on starts at page 161. So those are a recap of the original document tables. So it's just a recap to show that they are the prudential indicators. You also have an indicator of ratio of financing costs to net revenue stream. This is how much your borrowing costs and your income from treasury investments and property fund investments are, what percentage they are in relation to the council's grant receipts and tax receipts from council taxpayers, business ratepayers, etc. So you can see there from the table at top of page 162, treasury investments account for in 2025-6 are expected to account for 7.05% of the overall income of the council, and that drops to a borrowing cost if the external borrowing is incurred as part of the budget setting process. The property funds you'll see there as well, they account for 6.53% of the overall council's financing requirement, and that is broadly similar throughout the 5 financial years. Paragraph Appendix 5.3 refers to the types of specified investments and non-specified investments that the council can make, but they are unchanged, so I don't propose to go through those in detail, and happy to take any questions if anybody has in relation to those at the end. And paragraph Appendix 5.4 provides a list of the sovereign countries where we will make investment, or we can make investments based on the sovereign ratings of the banks. So, for example, we will only invest in banks that come from those countries, subject to approval from the Section 151. That concludes the report. The recommendation on this report is that the Audit and Governance Committee scrutinise the Treasury Management Policy Appendix 1 and the Treasury Management Strategy Statement, Minimum Revenue Provision Policy Statement and Annual Investment Strategy 25-26 Appendix 2, and make any comments and suggestions for consideration by Cabinet on the 19th of February 25 and Council on the 3rd of March 2025 when they consider these documents as part of the budget report. That concludes the report, and I'm happy to take any questions.
Thank you, Sean. As usual, a very detailed and thorough and comprehensive report, and easy to follow what you're saying. Thank you very much. And I'll take questions from the floor. Anybody from the committee want to raise any questions at all? No? Nobody wants to raise a question? I know it's in the report. You're that good. Nobody wants to ask any questions.
They're confused.
Thank you for that. So going on to the recommendation, I won't read the recommendation out again because actually Sean read it out just before he finished. So could I have a proposer, please? Councillor David Scoot and seconded Councillor Mike Gilbert. All in favour of the report? Carried, thank you. Thank you, Sean, for that lovely report, and we'll move on then to the next agenda item. And that is the budget overview. That's on page 175. And I'm going to ask Christine to present that report to us. Thank you.
Thank you, Chairman. I'm just going to flash a presentation up. I have abbreviated it in like the length of the meeting to hopefully, but the full presentation will be available should members wish to see it. So I'll just get this going for us. So what I'm particularly wishing to do this evening is to focus on budget risk. Previously, I've gone through the whole budget, but this time there's a particular need to focus around the risk that's embedded in the budget. And then we'll have a brief pause and I'll take you to the risk section of the budget report as I have some recommendations and proposals to you, and then we'll get that, hopefully, if you agree, we'll get that amended for the final version.
Okay.
So one of the biggest risks in the budget is where your funding is going to come from in the future. So with the change of government, we have seen a significant change in funding for councils. They have to consult on any changes. So the amount they can do for 5-6 has been limited. Because they could only play about with some of the smaller grants, but they are going to launch a consultation next year, which means they can change the underlying formula. So if you like, we're seeing a little bit of what's happening. The big news will come later in the year when we see what the proposals are for moving funding for 6-7 onwards and a multi-year settlement. So what they've effectively done, and you'll see it when I go to one of the other slides, a lot of smaller districts, rural districts have lost funding, that all the rural services delivery grant has gone. Just to put that in context, for East Lindsey, that was £900,000, so fairly large. So some authorities have been significantly impacted upon. County Council, I think it was around about the 4 million mark. So rural services delivery grant has effectively been removed, services grant has been removed, and some other smaller grants. And what they've done is they've grouped that together into recovery grants. So all that funding that has been, if you like, removed from one area, it's been bundled together to create a £600 million pot. And then that has been redistributed. And it's the methodology they've used to redistribute it, which gives us a little bit of a feel for what's coming in 6-7. And that has been particularly looking at high areas of deprivation with a low ability to raise council tax. Now, what was fascinating for me was you actually do fulfil that sort of context, got high levels of deprivation, and the majority of your properties are A, Bs and Cs. So, you know, there's a very low ability to raise council tax versus somewhere that perhaps was EFGs. So, but despite that, when we see the settlement table, you still lost £265,000 in government grant. Alongside that is the intention to reset business rates. So, so two really big levers being pulled by government, one around refocusing the settlement and doing that in a particular way, and the second one carrying out the reset of business rates. Now, the reset of business rates has been talked about for years. When the system came in 13-14, there was an indication it'd be every 3 to 4 years, something like that. We haven't seen it yet. And that would effectively reset your growth down to a baseline level. Now, what tends to happen with government when they do these big changes, they don't tend to do it in one big hit, because obviously that would be a bit of a shock within the system. They tend to do it incrementally. So my guess would be when they do the consultation later in the year, and it will be again, they're saying a multi-year settlement, I think you'll see a clear direction of travel within that multi-year settlement that may indeed create pressure for Boston Borough Council in terms of its future financing. Now, a lot of that is not yet known. They are unknowns, but we do know the reviews are coming. And we've had a little bit of it as part of this year's settlement. And you can see that from this. So this is your grant settlement for last year. Your revenue support grant, sort of a modest increase, but you can see there, rural services delivery grant gone, 116,000, services grant similarly gone, a significant decrease in your funding guarantee funding floor, but then a new recovery grant coming in at 306,000. But you can see even with new homes bonus reduction there, your net position is 265,000 less. Prior to that, in all previous years, we've tended to see a gradual uptick, so a modest increase, uplifts for bits and pieces, whatever they might be. The other sting in the tail we've had this year is the NI increase, which has not been fully funded. So even though, obviously, with all the national context, the funding that was allocated for it would never have fully funded it anyway, but then the methodology that went with it meant that similarly that full funding has not been received. So a real challenge there in the system in terms of future funding. So that's one risk. So let's talk about that. That's one risk effectively that we've got coming. The other big one is the collection fund. Now this is where all your business rates and your council tax all is in the system. And this is, and I described it earlier today to another member, it's a little bit of a barometer of your economic health, because if businesses are paying their business rates, if council taxpayers are paying their council tax, you probably have a little bit of surplus feeding through. But what we have is a very flat position for Boston, and also not much yield uplift within the system. So very challenging again. And also on top of that, the business rate reductions for next year for certain sectors has reduced. So again, that also means there's more risk in the collection fund as to whether or not we'll be able to successfully collect that debt. So the way effectively the collection fund accounts is it is constantly almost testing the cash within the system. You know, we're raising debt. Is it coming in? What's our bad debt provisions? It's constantly testing that, and you have annual surpluses or deficits. But what we're seeing for Boston's collection fund is a difficult position. So it's a challenging position with the collection fund. And again, when the system was brought in 13-14, we all knew this was going to have volatility within it. So that again is another significant risk within the system. In terms of other budget pressures and future risks, pay, obviously we need to accommodate, and I've talked about pension costs. There's triennial review coming up, and I think that is something I'll be particularly asking my replacement to have a good look at in terms of the pension fund contributions. Forecast reduction in investment income, you know, despite Sean's best efforts at making sure we squeeze every drop of value out of those funds, it is coming down, albeit slower than we anticipated. And also use of reserves to fund capital. The really other big risk within the system that we spend a huge amount of time talking about and embedded within the budget report is the IDBs. You are one of those few councils that has IDBs. It is not funded, and that effectively means over the past 4 years, you have a £1 million per annum pressure sitting in your revenue account, hence the significant lobbying we've done of government to increase their £3 million allocation to something closer to what it needs to be, of circa 10 million as being lobbied by the DCN, to get it close to the national pressure over that period, which is about £15 million. So £1 million per annum for Boston to be able to accommodate that is not realistic or pragmatic. It's not possible. So it is going to put your budget in quite a difficult situation moving forward if we do not have a significant uplift to that. Now, you did have an uplift from last year from 3.4 to 4.5, but nowhere near what it needed to be to reflect that pressure. So we are cranking that up. We saw the minister only a couple of weeks ago on this matter. So, you know, we're continuing to have those conversations. I think they understand the problem. I've sent them the analysis. It's very clear. We have to pay that levy. And we don't, you know, the IDBs do an excellent job for us keeping our feet dry, but we have no income to pay for that levy and the increases. And just to set it in context, in previous years, it was probably going up by about £40,000 to £50,000 a year. So still not, you know, insignificant, but certainly not £1 million over 4 years. Contract costs, including PSPS, they obviously don't benefit from the NI. Feeding through to grants and other costs within PSPS, benefit costs, the transfer to universal credits, again, a lot of change in the system, audit costs, sorry about that, but we have seen substantial increases in audit costs, and I'm sure we will see increases in our insurances when that tender goes out to the market, income pressures, planning, building control, car parking, homelessness, and one that has already been mentioned that is on the horizon, food waste coming in for 6.7. Again, government funding is promised to support the revenue cost of that, but will it meet the full cost of it is the question to be posed. So in terms of your capital programme, I know we very often debate this about how much risk there is in the system regarding capital. You've got a significant amount of government grant you are deploying. It is the majority of your capital programme. The risk there is really about whether or not we can get everything in within the budgets that we have, you know, that contract inflation risk that's out there at the moment. And I know the team are working really well to try and make sure that we are bringing our capital programme in on budget and grant allowance. And just again, set that in context, 30 million of that capital programme is external grants. Treasury management, we've talked a little bit about that earlier. MRP we've covered quite already in quite a significant way. But again, it is one of the risks within the system. I won't go any more on that. Reserves, you have pretty healthy reserves. I'm comfortable with where they're at. However, there is a lot of risk in the system, so therefore they need to be healthy. The big one that's taking a reduction is capital funding reserve at the top, and that is due to part funding of the GMLC projects. The big risk within the system is the efficiencies requirement. Now, we're not at the end of the budget setting process. I'm continuing to explore opportunities, as Sam and the team know, where we have some income opportunities that we perhaps need to feed through into the budget. But the efficiency target for next year is a significant 402,000. You may recall it was 200,000 this year, which we're doing really well in moving towards. So your overall achievement at Q2 on budget efficiencies was 78%. So we're doing very well performing about that. But next year with that IDB pressure, if you didn't have that IDB pressure, you would be, 402,000. I'd be saying, yeah, we can cover that during the year through savings, efficiency and transformation opportunities. We've seen a lot of savings from IT. We're bringing a lot, doing those transformation opportunities, the shared services and the service reviews, all looking to bring forward good savings opportunities through sharing resources. But that bottom row is really unbridgeable in terms of that IDB pressure. New to your budget report is the Section 25 statement. Now, it was previously embedded within the budget report, but because of the budget risk now emerging, I have significantly enhanced that, and it is a separate statement added to the rear. For the final version, I will flip it to portrait. It's currently being shown in landscape, which is making it a little bit harder to read. But again, the key areas of risk: IDB, future funding, investment income, service changes, and the business rate reset. So very challenging. Savings, efficiency and transformation will be critical. So there's a little bit of a summary there. There's just one I haven't mentioned, which is worthy of mention. Well, two actually. The leisure contract that's out for procurement at the moment, that could be significant. So even though we've changed, we're currently out again, that again could be a significant opportunity in terms of savings for the authority. But the other big one is the EPR payments that the council is now receiving. Extended producer responsibility payments, which are effectively payments from government for those things in the waste that producers are now having to pay for. So certain packaging can't be recycled, and we have to treat it, if you like, because it's not cardboard. It may be, a metallized or something like that. So effectively, we're now getting a new funding stream, which for this authority is £946,000. So not an unsubstantial figure. What we don't know is what that figure will be into the future. Half of that has been built into the budget as it stands at the moment. So going on to the risks, what I'd quite like to do now, if I can quickly whisk through the risks and go to section 11 of the budget report on pages 214 and 215, is to have a quick gallop through the risks that are there and with my recommendations as to how we might change some of them for the final version. And obviously Suzanne is here as well, picking that up as part of her risk process. So the first one is fairer funding and business rate reset changes. I have combined that to include the one lower down about a poor settlement for rural councils, because effectively they have all been blended together now as part of that government funding, and its likelihood and impact is high. Going on to the IDB, please, what I'll do is I'll rattle through them. If anybody is not happy with any, again, conscious of time, please do shout and I will pause at that point. Yeah, okay, no problems. IDB levy, yes, high. Interest rates, no longer increased interest rates, should be interest rates changing, high. Growth plans may require borrowing at some point in the future. I think that's more of a medium now, with your LUP and LUF funding and your towns funding coming in to support your programme of activity. Homelessness, again, leave high. Lack of clarity for funding levels beyond 25, 26, high. So that'll be shifting medium to high in impacts. Fluctuation in business rates, absolutely agree. That should be high. Pension fund deficit, I think medium is appropriate on that. Additional bad debts as a result of economic circumstances, I'd like to move that to high. We are seeing challenging circumstances for council tax and business rates. Increased maintenance costs of ageing assets, high, upticking that. Inflation, happy to keep that at medium. I think we've seen the inflation come down significantly now. That's much more under control. Core income go to high, medium, away from high, low. PSPS to be left at low, medium. This is about within it constraining within the contract price. Fluctuation in business rates is duplicate, so that one will come out. Agree with fee income volatility, high. Contract cost volatility, again, maintaining that as high. We haven't completed all of your contracting for your capital programme, so there could be some surprises within there. Lack of funding to partners causing displacement, absolutely high. We could see cost shunting. Inadequate capital finance resources to finance future desired plans, high, medium. I would suggest, again, you've had a significant amount of funding for those plans. Central government policy changes, high. We could see more of that feeding through with the new government. Future of NHB is completely unknown, so that needs to stay high. VAT partial exemption, we have that well under control now, so I'm proposing we go to high, medium on that. Failure to deliver the required transformation programme, to leave that at medium, high. And reduction in investment values, I think we should have that at medium, high, uplifting it from medium to high. The next two, central government and poor settlement, have been incorporated into others, and increased demand for services in general, proposed leave at medium. Happy to take any questions members may have on that review of the risks.
Just very quickly from myself, can you just explain how you arrive at the highs and the mediums? What process, or what is the factor that we use to get to that level?
So it would be about what, in terms of the likelihood, is it in the system effectively? So can we see it emerging within the system? And the ones with highs, we most definitely can. And then in terms of the impact, what will the financial impact be on the authority? And what I would say about Boston's budget, it is a modest sized budget, so it gets buffeted a bit more than it would if it was of a larger mass. So a larger mass authorities tend to have more balancing out of these factors, and I come back to, again, things like the collection fund, having buffeting, economic buffeting that is taking place. So I've looked at the economic factors to arrive at a view in terms of impact and the financial impact.
The actions that you've listed here, is there any movement on how to get those actions to reduce those highs to mediums and so on? Is there any sort of, I mean, you say what the actions are, but what
Do you drill into those actions, Christine?
I will be reviewing all of the actions and updating them once we have a reviewed likelihood and impact, and we'll get that recirculated out to make them a bit smarter to get them out to the committee.
Okay, thank you. Councillor Austin.
Bearing in mind that unitary is looming large in 2 years' time, we don't really need to have any sleepless nights, do we, in view of our reserves? Do you feel that our reserves are quite adequate to cover all these risks that you so eloquently tell us about?
I don't have a crystal ball there. What I would say is the government has given you significant funding for the IDBs in the past. I am really hoping that goes in the right direction in terms of the next stage of the settlement process, in terms of that particular risk. In light of that and the reserve level you have, you are in a reasonable position. However, if you're in a situation whereby you were not getting that funding, that could very rapidly move the other way.
I'm sure you're monitoring it very closely and very carefully. Councillor Gilbert.
Thank you. Just a couple of, it's a really, really challenging trading environment, to coin a phrase, really, isn't it? I don't think I've ever seen it as bad as this. So we've got a lot of things to concern ourselves with. Just one small point, should on page 196, BTAC be included as a precepting authority? We've got the parishes down there, or is it included in Boston Borough?
It's included in Boston Borough, so it's a special expense area.
Right.
It is embedded within your council tax requirement. So whilst it's not a separate precept per se, it's an embedded precept.
Okay, thank you very much for that. And then my main question is really in relation to new homes bonus. You've identified that as being high risk with high impact. Is that due to the fact that you anticipate there'll be a falling off of housing development in the area, or that the government are likely to reduce the bonus per house built?
They're carrying out a complete review of the NHB system. So it's not to do with your house building outcomes. This is to do with the funding methodology and how they might redirect that funding as part of any review process.
Happy? Right. Sorry, Councillor Mountain.
Thank you very much. I think we discussed this at the last scrutiny, corporate and communities, and again, I'll bring it forward onto this committee as well. The IDBs give me sleepless nights in the nicest possible way. It is a ticking time bomb that I don't think the public fully understand of what is going on behind the scenes. My main concerns, like we discussed last time, was the fact that if we don't get this funding through, it's going to start eating into our reserves. And I appreciate that we will be going into a unitary council at some point in the very near future, potentially. However, how long can we last eating at our reserves? Because the way this is looking for my view, and it's like I explained last time, it's almost like the household income is less than your outgoings. You can't live like that, so we can't.
It depends ultimately on how much funding government give you as part of that final settlement and what the allocation is for Boston. You'll recall they may increase the sum, but then not announce the allocations until afterwards. And we saw that 1 year. I don't think we saw the allocations until May, June time. So again, that makes it quite difficult from budgeting purposes. So I hope that we get something in February, in middle of February, when the final settlement comes through. That will give us an indication. If the 3 million is maintained at 3 million, then you could take the view that it might be similar to last year, circa 400,000, but that still leaves 600,000 to cover off and would eat into your reserves quite rapidly.
Thank you very much.
Anything else on that one?
No, I will continue to have a sleepless night until I find that this is sorted.
Councillor Middleton.
More of an opinion, really, Christine, is the government wanting to encourage councils like us to spend our reserves? Are they going to keep us short of money to make sure we do spend those reserves instead of their central money?
I think that's an interesting question. There was a narrative with the previous government that there was a view reserves were being kept too high, and authorities were being encouraged to make use of their reserves appropriately. And some have indeed used reserves to support their revenue accounts over a number of years. I can't comment on the new government in terms of any clear direction on that. But if you cannot balance and you have something within your revenue account that you have no income for, and that it is going up at the pace it is increasing, then you have a very challenging situation. Hence the lobbying. There was no doubt back in 22-23 when those inflation increases started to come through. And I went to government, I said, I'm not quite sure how these three authorities are going to afford this. We're actually back there now. The figures I'm looking at now are very similar to the figures I was looking at in 23-24 when we got that original tranche of funding. So again, we need another tranche on top of this tranche to get it close to where it needs to be. But it is very challenging. Over the three authorities, the total increase is 4 million. So over that period, it's a £4 million bill increase for South Holland, East Lindsey and Boston. We are the top three in the country and we desperately need funding to support that levy.
Thank you, Christine. Any more questions for Christine at all? I'm just going to read the oh, sorry, Gideon, over to you.
Thank you. Yeah, just some niggly, a couple of niggly ones, if that's okay. On page 194, we've got the number of Band D properties going down in 24-25 from 20,302 down to 20,290. Is there a reason behind that? Are they revalued or?
No, there is a reason for that, and that is the change in the council tax support scheme. So you may have noticed in the press that the authority has decided to put a more beneficial council tax support scheme in place that effectively has been absorbed, but the uplift, which is there, has been absorbed by reduction because people won't be being charged effectively as part of that scheme.
Okay, makes sense, thank you. And then finally from me, page 198, the parking income has been budgeted for increasing quite substantially, well, reasonably substantially over the next few years, but the it appears that the town's going in different direction with the decrease in the market and all the rest of it. So is there a logic behind increasing the parking?
So you may be aware we put new parking machines in recently, and we actually saw an improvement in income as a result of less breakdowns, etc. And then there has been an RPI, not excessive, but an RPI uplift that applied through those years. So it's a combination of getting our income back to where it needed to be through losses. Some of the other income lines have been subject to the economic environment, things like planning fees and building control fees. We've seen downturns as a result of land charges is another one. And in terms of bereavement, which was discussed last week, that one is due to changing purchasing habits for people going for direct cremations, which are a lower cost.
Right, I think we've debated and chatted about that topic enough. I'm going to read the recommendation. So the draft budget medium-term financial strategy for the period 25-26 to 29-30, scrutinised by the Audit. With a particular focus around budget risk and feedback is provided to the Cabinet on the 19th of February 2025 and the Council on the 3rd of March 2025 when they consider these documents as part of the budget report. Can I have a proposer, please? Councillor Danny, can I have a seconder? Councillor Gleeson, all in favour? Thank you very much. So we've covered that point. All details have been recorded there by the officer. The work programme, if you look at the work programme, colleagues, the April meeting is going to be another big meeting, the looks of it. So
we need to make sure that we keep the thing tight, the meeting tight and to the point. Because obviously we don't want you keeping people here till this time of night. It's quite late. But I want to thank everybody. I'd like to thank KPMG. I'd like to thank all the officers, our independent laypersons, Gideon and Adam, and all our committee members and our officer here, Amanda, for all the work and all the reports. I do appreciate what you've done. And, you know, we've had an interesting meeting. I know it's a long meeting, but I'm a great believer we've got to get those questions out there. And we've got to get asked the right questions and get the right information back and the reassurances we said. So I'd like to wish you all the very best wishes. Thank you very much. Safe journey home. I'll see you in April for another big meeting. Thank you.